Welcome to another deep dive. We're going deep into the Reserve Bank of India's October 2024 bulletin.
Yeah, a lot of great stuff in this one.
It's packed full of really interesting economic insights. We've got 7 articles to get through.
Yeah.
Covering all sorts of things from like the global outlook to AI in the banking sector.
Right.
It's really like a crash course on the state of the Indian economy.
That's right. And we'll try to highlight the most important things from each of these articles and kind of try to weave it together into a story that should hopefully help our listeners understand what's going on in India right now.
Perfect.
Yeah.
So let's jump right in. The first one on the docket is State of the Economy.
Okay.
I have to admit, when I see a title like that, I immediately think of, those really dense economic reports they show on the news.
Right.
But don't worry, we're going to break it down into something a little easier to digest.
Yeah.
So what's the overall picture here?
Well, the good news is that the global economy has shown some real resilience in the first half of 2024. Declining inflation has really given consumer spending a nice boost.
Oh, that makes sense.
And a lot of countries, including India, are kind of starting to ease up on those tight monetary policies we've seen in recent years.
That's good to hear, for sure.
Yeah.
But the article also mentions a bit of a slowdown in India during the second quarter of 2024-25. What's the story there?
It seems that those heavy rains in August and September maybe had a bigger impact than expected.
Oh, really?
Disrupting certain sectors. But despite that, and despite all the geopolitical uncertainty going on in the world, India's growth is still looking pretty solid.
Okay.
Fueled by strong domestic demand, and there's even some promising signs in private investment, which is, great to see.
That is good. Yeah, so it sounds like kind of a mixed bag, but overall a fairly positive picture.
Mm-hmm.
But hold on, what about that jump in inflation in September?
Yeah.
The article mentions this statistical base effect and rising food prices.
Right.
Can you unpack those a little bit for us?
Sure. So the statistical base effect just means that because inflation was so low in September of last year,
Okay.
any increase this year is going to look much bigger
I see.
in comparison. So it's kind of like if you let the air out of a balloon and then blow it back up, the change seems more dramatic just because you're starting from a smaller size.
I see.
As for food prices, they've been trending upwards lately, which definitely adds to the inflation pressure.
Right.
But the expectation is that things will balance out as we head into the festival season and consumer spending starts to pick up.
Okay, so overall, a pretty positive outlook for India with a few bumps along the way.
Yeah, I'd say so.
Now I'm curious about the RBI's role in all of this.
Okay.
Let's move on to this article titled Monetary Policy Transmission in India, the Recent Experience.
Right.
So first of all, what exactly does monetary policy transmission even mean?
It's basically just a fancy way of saying how the central bank's actions, like, changing interest rates,
Okay.
actually affect the real economy.
Gotcha.
And this article is specifically looking at how the RBI's tightening of monetary policy since May 2022 has played out in different sectors.
So we're figuring out if the RBI's moves are actually having the intended effect.
Exactly.
Okay, what are the findings?
Well, it's interesting.
Okay.
The policy had a very significant impact on financial markets,
Okay.
especially like money markets, government bonds, and corporate bonds. But the impact on the foreign exchange and stock markets was actually relatively small.
Interesting. So what's the takeaway here?
So one of the most important outcomes was what they call anchoring inflation expectations.
Okay.
This basically means that businesses and consumers started to believe that the RBI was really serious about controlling inflation. And that belief actually helped moderate price increases.
Wow, that's fascinating.
So the article shows that this policy actually led to a significant drop in both overall demand and headline inflation, about 160 basis points, by the second quarter of 2024-25.
So the RBI's moves really did make a difference.
Yeah, they did.
That's really good to know. All right, let's shift gears a bit.
Okay.
Let's talk about something that's changing the game in just about every industry.
Right.
Artificial intelligence.
Mm-hmm.
I am super curious about this article. How Indian banks are adopting artificial intelligence.
Yeah, it's a good word.
We hear so much about AI these days, but what does it actually look like in the banking world?
Well, Indian banks are definitely embracing AI in a big way. They're using it for everything from simple chatbots that can answer customer questions to, more sophisticated systems that can analyze tons of data to predict market trends or even detect fraud.
Wow, that's a lot more than I even imagined.
Yeah.
The article also mentions things like robotic process automation, the Internet of Things,
Right.
and natural language processing. It seems like Indian banks are really going all in on the latest technology.
They really are. And what's interesting is that while private sector banks were kind of the early adopters,
Okay.
public sector banks are catching up really quickly. And now they're pretty much on par with their private counterparts in terms of AI adoption.
That's impressive. So it's a level playing field now.
It really is.
But what's driving this trend?
Well, competition is certainly part of it, but the article points out that a bank's asset size and its capital to risk-weighted assets ratio also play a big role.
So basically, the bigger and financially healthier a bank is, the more likely they are to invest in AI.
Exactly. It's like they have more resources to play with.
Yeah, I guess.
Which allows them to experiment and implement all these cutting-edge technologies.
It does make you wonder if this will create an even bigger gap between the larger banks and the smaller banks in the future.
Right.
But before we go down that rabbit hole, let's switch gears again and talk about a sector that's really vital to the Indian economy.
Okay.
Micro, small, and medium enterprises, or MSMEs.
Right.
This article, COVID-19 and Performance of MSME Clusters in India, looks at how these businesses have fared since the pandemic. And I'm really hoping the news is good because we all know how important MSMEs are to India's economic fabric.
For sure.
So what do they find?
Well, get ready for some good news.
Okay.
Despite all the challenges they faced,
Yeah.
a significant number of MSMEs in the surveyed clusters have actually chosen to formalize their operations by registering their businesses.
That's a big step forward.
It is.
Does this mean they're getting better access to like financial services and support?
Absolutely. The survey found that nearly 70% of these MSMEs are now bank-linked, using bank accounts for salary disbursements.
Wow.
So it's a clear sign that they're becoming more and more integrated into the formal financial system.
That's fantastic.
Yeah.
So even though MSMEs were hit hard by the pandemic, it seems like they're bouncing back and taking these important steps toward a more, stable and secure future. It's really encouraging to see that kind of resilience.
Yeah.
But I'm curious, how are they managing their day-to-day finances?
Well, a lot of MSMEs rely on personal savings, trade credit, and retained earnings to keep things running. But here's the interesting part. Almost 80% of MSME loans actually come from institutional sources.
Wow.
With a whopping 96% of the total loan amount coming from these institutions.
Those are some big numbers.
They are.
So even though they rely on, more informal sources for daily operations, institutional credit is clearly crucial for their overall financing needs.
It is.
That's a promising sign for the sector for sure. But what about the challenges they face?
Right.
Are they primarily related to financing, or are there other factors at play?
Well, access to finance is definitely a big hurdle.
Yeah.
But this article found that the challenges faced by MSMEs are actually much more structural.
Okay.
Things like the cost of electricity rent and debt servicing really have a huge impact on their profit margins.
So it's not just about getting the money, it's about creating an environment where these businesses can thrive.
Exactly.
What are some of the solutions being explored to address these challenges?
Well, the article points to government schemes like the Emergency Credit Lending Guarantee Scheme
Of course.
or ECLGS, which provided a lot of support to MSMEs during the pandemic.
Right.
It helped them access the credit they needed to weather the storm. And the RBI is constantly working on policies and initiatives to try to improve the financial infrastructure and make it easier for MSMEs to access affordable credit.
It sounds like there's a real push to support these businesses.
Yeah.
Which is great to see. All right, let's move on to something that affects everyone.
Okay.
Regardless of, their business ventures, food inflation. As someone who loves to cook, I'm always keeping an eye on those grocery prices.
Right.
This article, Now Casting Food Inflation in India, Leveraging Price and Non-Price Signals Through Machine Learning. Sounds incredibly complex.
It's a mouthful.
It is a mouthful. Can you break it down for us?
Yeah, so food prices affect everybody's wallet.
Right.
And they also make up a huge chunk of India's Consumer Price Index,
Uh-huh.
or CPI, which is the main measure of inflation.
Okay.
So this article is exploring this really cool new technique called nowcasting,
Okay.
which uses machine learning to basically get a real-time handle on food inflation.
Okay, so nowcasting sounds super futuristic.
Yeah.
What exactly does that mean?
So think of it this way. Forecasting is like looking ahead and trying to predict the weather next week.
Okay.
Nowcasting is like checking your weather app to see if you need an umbrella today.
Oh, I see. So it's more about understanding what's happening right now.
Exactly.
Okay, but how does machine learning fit into all of this?
So instead of just looking at historical prices, this study uses tons of data and these sophisticated algorithms to see how well we can predict food inflation using high-frequency retail and wholesale food prices, rainfall patterns, wage levels, and even crop arrival information.
Wow. So they're basically teaching a computer to understand all of the complex factors that influence food prices, and then using that knowledge to figure out what's happening right now.
That's a great way to put it.
Okay, and what did they find?
Well, one key takeaway is that expanding the information set beyond the traditional models significantly improves the accuracy of these nowcasts.
Thanks for watching first part of RBI Bulletin. Like and subscribe. Stay tuned. We will back soon.